All right, on to our next topic, listing the initial steps in the accounting cycle. All right, so our accounting cycle is the individual steps that make up the overall accounting, reporting, and recording process. Okay, so I'll say that again a little slower. So it's the individual steps that make up the accounting, recording, and reporting process. Recording and reporting process. Okay, those individual steps. How do we go about recording things in the company's financial statements? That's why we started with learning those rules in Chapter 3, because we need to know what's guiding us as we record and report. All right, so the first thing we're going to do is identify and analyze. Identify and analyze. So basically for the identify, it means has a transaction actually occurred? Has transaction occurred? Right, and so for that, we look to see, has the financial position of the company changed or not? Okay, if we identify, yep, there has been a financial transaction, it needs to be recorded, let's go ahead and identify the accounts. And so I guess analyze, impact to accounts, right? Using those debits and credits that we've talked about. So we remember for double entry accounting, at least 2 accounts have to be impacted. So impact to accounts. So remember 2 accounts, at least 2 accounts have to be impacted. And then we're going to use debits and credits to record that impact. Okay, so that's the first step in the accounting cycle. And I think I'll pause there before we go on to our next step, before we go into step 2, so that we can practice a little bit more with identifying when a transaction has occurred and recognizing the accounts that will be affected. Okay, so I'll go ahead and post a little practice exercise for us to work through next together.